My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, today we have a special treat. Lou Pacelli is zooming in from just outside of Manhattan. He's actually in New Jersey. But what's really interesting about Lou is he has 35 years of experience in the banking industry, helping people get money in commercial real estate. And these days, he's focused on doing that for himself and his partners by becoming an active capital raiser and co-GP on deals. So Lou, welcome to the show. Great to have you.
Thank you. Thank you for having me.
So Lou, give us a little snapshot of what kind of properties you guys are looking for. What's in your buy box? What kind of market areas are you focusing on? And then we'll start talking about your experience with capital and investors.
Yeah, well, I right now am focused on investment real estate in the residential market, in the residential class, apartment buildings, ideally 100 units or more.
Mm-hmm.
It depends on the market. With the price point here in New York, that would probably be 50
A
million.
duplex.
Yeah, well, that would be too big of a project, but
Uh-huh.
out in the Midwest, secondary markets. There are some good secondary markets. We like, for example, not necessarily Austin proper, but the surrounding area of Austin.
Yeah.
There's isolated pockets that are good. And the Dallas-Fort Worth isolated pockets, same thing. In the South, not Florida so much right now, but that might change. But yeah, definitely the Carolinas and sections of Georgia, around Atlanta. Right now, I'm involved in workforce housing, but ideally, and before, a lot of people may not like that, but it does cash flow well.
Mm-hmm.
What we always say is Section 8 always pays the first of the month. You know,
Exactly. Yeah.
it's not if you have a good operator, a good partner there, which I do, who goes after every nickel and dime, and you're really on top of that delinquency report,
Mm-hmm.
you could do really well.
So
And
what does the portfolio currently look like in projects that you're involved in at the moment, Lou?
The portfolio will look like, yeah, for example, like a 120 unit apartment complex in the suburbs of Austin, maybe in Charlotte, another 80 to 100 units, and we would do that. I have spoken to some institutional investors, meaning some opportunities with family trusts and family offices.
Mm-hmm.
But right now, and their check sizes are larger. We could absolutely, with a partner, take down a larger deal, like a 20 10 in the 10 $20 million range. But
Mm-hmm.
that would require some negotiations and some cooperation.
Yeah. Okay. Very good. So, Lou, as I mentioned at the top of the interview, you've got a ton of experience in banking, especially in commercial, if I recall correctly, in commercial real estate, helping people and that. Tell us a little bit about that and how that has translated into what you're currently doing.
Yeah, I mean, my background kind of suits me well for this. I started out many years ago out of college in accounting, worked for accounting firms and did all that as well as tax work, but I don't do that anymore. So that gave me a good background to go. And then probably after 10 years of accounting, I had enough of that and I went into banking. So I would say and I was in a lot of different areas in banking, predominant, always commercial banking and
Mm-hmm.
always business. So I was doing C&I lending as well, but I kind of settled in about 25 years ago into the commercial real estate, and I liked it a lot. And I just I got credit trained at Chase Bank in New York in the mid 90s, and I just never looked back from there. And I focused on real estate, underwrote deals in every asset class, and I could still underwrite deals in every asset class. While I'm focusing on residential, other opportunities aren't foreign to me.
Mm.
Like I like industrial. I like light industrial. I like the warehouse markets. Here in Eastern Pennsylvania, we have a lot of that, like the Amazon type warehouses, the large warehouse boxes.
Yeah.
Those are, and also smaller opportunities where the square footage is more diversified. Instead of just one large tenant, you have a well-diversified property. Um, with AI coming in, we have a lot of data centers. The problem with data centers is is the power grid is can't handle it.
Yeah.
For, but once that's settled, once we find power, we could that's a great opportunity.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Interesting stuff, Lou. So, these days, when you're working on a project or looking at a project as a co-GP, what is your primary role uh, as part of that? Is it capital raising? Is it underwriting? Is it dealing with the legalities, the banking, the accounting side of things? Where do you fit in?
Well, right now I'm wearing all the hats, but but capital raising's a little different for me. Being in the banking world, they come to me for money, so
Yeah.
that's what I'm kind of used to. However, that's definitely a component because people need that capital. So, but that's probably not my strong suit. My strongest suit is in underwriting and in risk management. That's where I've been my whole career in risk management. So I know how to sniff out a deal. I could figure out whether I could pencil it out within minutes and pretty much know where it's going to land.
Mm.
But then I do the
That's
detail
good.
work
Yeah.
and decide if it's. And I'll be honest with you, the past 5 or 6 years, I've looked at hundreds and hundreds of deals and found 99.9% of them weren't worth the price they're asking.
Yeah.
So that's been the challenge. That's the real challenge, more so than raising money. The money's out there. It's the capital is out there. The people want to put it to work. They're eager to put it to work, but for the right deal. And that's where I shine. I'm not going to put somebody's money to work. I'm not going to put my investors' money to work on a deal that I know is too overpriced. And that's primarily why I'm in these secondary markets because you can find bargains there. You can't find bargains in New York anymore. They
Yeah.
want they want crazy money. I mean, I looked at a 10 unit apartment building that was pre 1920 and it was like $15 million, and it was like maybe, oh no, it was like 40 units. I'm not even like 100 unit building, so it was a beautiful building, but you know it, even though, and the rents are high in the market, but I
Yeah.
don't
There's
know.
there's a lot can go wrong with a
Yeah,
hundred plus year old
a lot
building.
of
That's for sure.
challenges with that.
Yeah.
Plus, New York now is really challenged with rent stabilization and rent control.
Yeah. So as we're recording this, we're at the beginning of 2026. Where do you see things going for yourself and your company over the next 12 months or so, Lou?
I see some opportunity. I see real opportunity in these secondary markets, in these good markets where where there are good jobs. And like I said before we went live is the markets we talked about were Austin, the Carolinas,
Yeah.
pockets. Austin, not necessarily Austin proper, like I said, but maybe the pockets outside of Austin. And the same thing with Charlotte, or the same thing with Greenville or one of those areas. They're smaller markets, but they are growing. A lot of people are moving there. Florida is still a challenge right now, with the insurance situation and a lot of other things with
Yeah.
flooding. But you know, but if the market comes down enough, that could be an opportunity. But right now, it's not.
Yeah. So, Lou, based on your many years of experience in banking and now switching gears and getting into doing your own deals in real estate, what have been some of your biggest takeaways when it comes to raising capital? Because, like you said, when you were working in the bank, they were coming to you for the money, and so now you're kind of on the other side, and you're having to raise not just
Yeah,
qualify for bank financing, but raise private capital as well. What have been some takeaways
yeah,
for you?
bank financing for me, making the numbers look good on paper is easy.
Yeah.
It's the part, yeah, this is a new experience for me, and it's all about relationship building and trust. And that's really what I'm learning how to do right now. Not that I don't know how to do that, but
Hmm.
that's really what I'm focused on right now is building those relationships and those trust bonds with people, the right
Hmm.
people, what we call the avatar, the perfect avatar, for lack of a
Yeah.
better term. But finding the right people, making the connection, making that positive connection, and you know I wasn't getting them to like you, but getting them to trust you enough, and that takes time and then that takes energy. And
Yeah.
that's really where I'm focusing my energy right now and time to to develop those relationships that I had. I mean, I had them in banking, but like you said, it was a different dynamic. It was a dynamic around
Right.
they're coming to me for money. But it's a totally different game
Plus, I
now.
would assume a lot of your co-workers and cohorts within the banking industry themselves are tend to be quite conservative and might be a little bit of nervous Nellies about investing outside of stocks, bonds, mutual funds, that sort of thing.
Yeah, I mean, the people I dealt with in the banks know real estate too, but they generally, I was a little unique in banking because I would jump into the I jumped in. One of the reasons why I left I'll jump into the investment side where a lot of
Yeah.
bankers won't do that. They stick to their lending and they never grow their. That's why they generally never get rich. But
Hmm.
you know, but over the 30 years in banking, I've seen, owners get super rich and I started thinking I made them rich.
Ah, yeah.
And why can't I do this for myself?
Nice.
Because I
Yeah.
know how. And but a lot of bankers don't think like that. They think like I have a job, it's safe
It's a
and
safe, secure job.
secure
Yeah.
job, yeah. But uh, that has a ceiling.
Right.
Oops.
Oops. There
Sorry,
you
my
go.
camera
You're
just
back.
fell on me.
So, as we're kind of wrapping up the conversation here, Lou, what, I mean, that it's a big switch going from a lovely corporate job in a bank to being self-employed in the trenches in real estate, all that kind of good stuff. You probably had lots of people helping you out in the banking world. You might have had your own secretary or assistants and stuff like that.
Yeah, I did.
What has been like, what do you like the most about what you're doing now? And what do you kind of miss from the banking days?
Well, there's not much I miss from the banking. Excuse me. There's not much I miss from the banking world.
Yeah.
A lot of wasted time in meetings.
Yeah. 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 Who misses that, right?
Who
Yeah.
misses that? But that don't really have to happen.
Hmm.
But it- I I love what I'm doing now because of the freedom it gives me.
Yeah.
You know, when I have work to do, I do it, and I'm very disciplined. But there's no when I don't have work, I can, when I don't have things to do right now, I could do things during the day on my own. So I have a little bit more freedom. I mean, I wouldn't say it's total freedom, but you still have to work.
Yeah.
But it's you could work at your own on your own time, on your own schedule. If you have to work late at night, you could do that, which if you have to work, so there's a lot more freedom, there's a lot more flexibility. I generally work from my home office, so it's pretty simple with the technology we have now. You never really, we're talking on a technology, so it's
Yeah.
very simple. Um, so that I love, and I've always loved I've always been more inclined to take the risk of ownership you know, versus the safety of a corporate job. And it's a false safety because you're really not making you're capping your upside.
Yeah. Well, and there's no guarantee. I mean, look at corporate downsizing too, right? You got, I
Well,
mean,
yeah, in the
safe and
old
secure
days,
until it's gone,
yeah, in
right?
the old days, corporations had some level of they took
Loyalty.
care of their loyalty, exactly.
Yeah.
Now it's kind of one-sided. They expect it from their employees, but they don't. And banks are no different. Banks are probably worse than your average corporation.
Hmm.
But that's the thing. They really have. There's really no loyalty. There's no guarantees. So why not take the risk? Because
Exactly.
you're not you're really not risking that much when you think about it. You're
Yeah,
not
well said.
risking it. Your upside is huge, and your downside is essentially the same. And
Well put.
I'm a risk manager, so
Yeah, exactly.
I
You're the
analyze
guy
that.
that was minimizing the risk for the banks for sure.
Exactly.
Lou, well, hey, congratulations for making the leap. Sounds like you're a much happier camper where you are now, and
Oh,
you bring a
absolutely.
lot of value to the table. I mean, all the 35 years of crunching numbers and analyzing deals and underwriting real estate, and that's huge value when you bring that to the table for your, if you're working with another co-GP on a deal.
Mhm.
That is very, and being able to put the numbers together, understanding from the inside out what the banks are looking for, what's going to resonate with them. That's very, very valuable. So, yeah, I'm excited to see where things go for you.
And I'm too. Thank you.
So, Lou, if people want to connect with you, where should they go? Are you on LinkedIn?
Yeah, the best place would be LinkedIn. I do have a website for Sentinel Harbor Capital, but it's right now a single page. I'm working on making it more robust. I mean, it'll explain stuff about me, but there's more information on LinkedIn about me,
Hmm.
and how to connect with me via email or phone. I think my phone number's on there as well. So everything's available
That's right.
online
So,
at
Lou
LinkedIn.
Pacelli on LinkedIn. You're
Yes.
probably the only one in Paramus, New Jersey.
Yeah, I'm the only one. Well, no, I wouldn't say I'm the only one in Paramus, New Jersey. Our ethnicity is well represented here in New
Okay.
Jersey.
Well, you're the real estate guy that used to be in banking, so that's how
Yes,
people can find you for sure.
yes.
Awesome, Lou. Hey, thanks for being on the show. It's been a lot of fun.
Yep. Thank you. Thank you.
All right, everybody, take care. See ya on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.